So we're seeing some reasonable gains at the moment for stocks in Japan and Korea, but want to look ahead to the Shanghai and Hong Kong opening. Both those indexes have been suffering modest declines, kind of going sideways all week. We've got rising COVID cases. The State Council now seeming to indicate a triple R cut is on the way. Do you sense that we've reached a bottom yet in Chinese stocks, or is there some way to go yet?
Well, I think in the near term, you're still going to see quite a bit of back and forth with regards to the COVID lockdown in parts of China. But if I take a longer term view over the course of next, 6 to 12 months, I do think that there will be gradual relaxation in policy, and I do expect some returning growth momentum in the Chinese economy. So from that perspective, given the valuations of Chinese equities right now is pretty attractively priced, I do think in 2023, China could well be a market that could outperform the global equity market.
We were getting some comment from Moody's earlier in the week, which sees credit conditions getting worse in China in 2023. How do you balance risks in that space?
Well, I think sector selection and active management is obviously key. We do think there are areas or sectors that's going to get a lot of policy support, whether that's in renewable energy, whether it's electric vehicles or semiconductors. So I think those will be the areas where liquidity or credit availability will be more readily available. But at the same time, I think consumer spending is going to be absolutely crucial. And also, as and when we do get this growth momentum returning, I suspect the banks, the financial institutions, they could well be more ready to provide credit once again. Right now, I think despite the fact that central banks have done a lot of work in the past 6 to 9 months on easing monetary policy, some of which have not been fully passed on to the real economy. So I think from that perspective, the banking sector, the financial sector needs to play its role in order to fully transmit those monetary easing to the economy itself.
The weaker currencies on the other side, as we've seen with a strengthening dollar recently and a weakening dollar now actually giving a boost to these developing nation currencies, how does that factor into the equity space?
Well, I do think it's a bit premature to call for a bear market in a US dollar. Typically, you do get some degree of risk aversion when the US economy slows down or even turn into a recession. So I don't think the dollar strength is quite over yet. But it is true that the US dollar is incredibly overvalued. I think the end of the Fed hiking cycle, and also again as we look into 2023, when US economic data start to bottom out, I think those will be the time to start to bet against the US dollar.